I have an interesting background because I'm a technology investor. And so I invested in Apple, Amazon, Facebook, and Google, and made a fortune in those companies more than a decade ago. Yeah. I'm also an entrepreneur. I started a dozen different things. I launched Alarm.com, which is a multi-billion-dollar publicly traded company, and I launched Angel.com, which was like an Alexa competitor or Siri competitor 20 years ago, and I sold it for more than $100 million. And I created my own company, MicroStrategy. So I know what it's like to be a tech entrepreneur. I know what it's like to be a technology investor. I also have run a publicly traded company for 20 years. So I have a pretty good sense of what it's like to be an institutional investor or an institutional public company officer, and what it's like to deal with securities regulators and bankers and large pools of institutional capital. Well, first, I have a big view of the world, which is there's $500 trillion worth of stuff you can invest in. If you have $1 billion, I could buy a building in any city in the world. I could buy land. I could buy gold. I could buy oil. I could buy oil companies. I could buy gold miners. I could buy Apple, Amazon, Facebook, Google, the index. I could buy derivatives. I could swap interest rates. I could invest in private companies. I could invest in private companies anywhere in the world. Or I can invest in Bitcoin, or I can invest in other crypto. So there's a lot of things to invest in. The way to think about the world is you got a pool of money that you want to save. If you want to save money for 100 years, you swap a weak asset for a strong asset. Figure out what you're going to buy that you're going to hold for 100 years and give to your great-grandchildren. It's got to be indestructible, durable, high integrity, right? So Bitcoin is the most indestructible, secure, durable crypto asset network in the world, undisputed. It's pretty obvious if you look at the Bitcoin miners and the Bitcoin holders, and et cetera. So if you were going to hold a crypto asset for 100 years, you want the dominant crypto asset. If you're an investor, well, would I invest in a company? Sure, I invested in Amazon, I invested in Apple, I invested in Facebook, I invested in Twitter. Like, I made a lot of money in those things. Companies have more regulatory risk. They might get unionized, they might get taxed. So if you look at some of the other cryptos, some of them look more like companies, or they're like gray market software companies. Like, they have software technology, they have functionality, you have to upgrade them every year. You have lots of hard forks. You've got developer teams. If they're not decentralized, they're competing against Amazon and Apple and Facebook. And so do I like them better than Amazon, Apple, Facebook? I don't know, maybe. If they are decentralized, then maybe they're property. But the truth is, Bitcoin is the only clearly designated property in the world, the only crypto property where it's clear that it's property. Everything else is a debate, right? And everything else has some risk. So you're taking more risk, and you're kind of taking competitive risk. Will Binance beat Solana, beat Ethereum, beat Cardano, which one will win? Yeah. Right. And they're all fighting over being the most functional, highest performance for a certain use case. That's a technology investment, right? It's not saving money for 1,000 years. See, the Bitcoin's not trying to, add 87 new features. Bitcoin is trying to last for 1,000 years. And so there's a different idea. Do I want to own 1/21 millionth of all the money in the universe for 1,000 years? Or do I want to have the next great NFT platform, or the best one, or the best whatever? So they're technology investments. And when I look at this as a company, our business strategy is property investment. We buy and hold Bitcoin, right? I mean, like, if you thought that you wanted to invest in Istanbul, I could just buy up all the land in Istanbul. But I could also decide that I want to build retail shopping centers and apartment complexes and office buildings and stadiums on top of the land. But you see, like, when I start building stadiums in Istanbul, that's a different business than just owning all the land in Istanbul. True. And if I decided I could build a big building in Istanbul and then rent it out to a bank, and then I could go in the banking business, and I could have a delicatessen, and I could have a hairdresser and dry cleaner in the building. But don't you see that every single time I start to do more things, I'm taking more risk? You know, how many buildings in Istanbul have stood for 100 years and they're still as valuable as they were the day they were built? In 200 years, I mean, the buildings will get taken down and rebuilt. Go to one of those buildings that stood for 100 years and find a business that's in the building that's a good business that's lasted 100 years and is more valuable today than the day that it was founded. How many of those are there? Property has a frequency of hundreds of years, maybe thousands of years. Platforms, buildings have a frequency of like 20 to 50 years if you're lucky. The companies, right? It's like Bitcoin's the property, the smart chains, you know, they're the platform. The tokens on top of them are the companies. They come and they go. The mortality rate with these crypto tokens is going to be 99%. But it's not that different than I wrote the mobile wave and I said, you know, the mobile phone's good. And so I bought Apple and I bought Facebook. And you would have said to me, well, Mike, what, you know, why don't you buy, you know, 87 other mobile startups? You know, there's 187.
I get you.
100 companies. And I'm like, well, how many companies failed for Instagram to succeed? And by the way, did Instagram succeed? No, they got bought by Facebook. Okay, WhatsApp a good idea? Well, that's not a company, that's Facebook.
Yeah. True.
Okay, so how many companies really succeeded? I would say probably 100,000 mobile apps got launched, and you can probably count 100 that succeeded, and you can count 10 that got 80% of all the value.